The one thing we've all done in this lockdown is cook a lot more at our homes, and therefore core consumption such as cookware continues to be in focus even as the pandemic is causing massive disruptions to health and also to wealth. Now, in our ideas for profit today, we will focus on and discuss about Hawkins Cookers Q1 earnings to see if it merits investors' attention at this point in time. Well, Hawkins has had an impressive Q1, and that is despite the nationwide lockdown and an uncertain macro backdrop as well. Now, the revenues for the quarter actually declined 29%, and that's on a year-on-year basis to 101 crore rupees. Negative operating leverage resulting from lower volumes had an adverse impact on the margins. Also, EBITDA contracted 55% year-on-year to 10 crore rupees. The profit after tax also declined 53% year-on-year despite the lower tax outgo. The supply chain was severely impacted during the lockdown, and the company undertook multiple initiatives to reduce the fixed cost and to stabilize its business operations as well. Now, amidst the lockdown, the company extended its support to suppliers and dealers through cash payments and also credit lines to manage the liquidity amidst the cash crunch as well. Now, after the washout in April, the demand actually started picking up in the month of May. Also, the company witnessed strong momentum in the month of July as the monthly sales were up more than 30% on a year-on-year basis. Now, the supply side constraints have also been sorted out. The production for the month of July was nearly 70 to 75% of the pre-COVID levels as well. So the market for pressure cookers is expected to perk up on the back of the government initiatives as well as such as Pradhan Mantri Ujjwala Yojana, and also the rollout of gas connections and increase in gas penetration has the potential to augment the demand for pressure cookers in the rural households. Now, the urban market is becoming a replacement market, and that is due to high penetration levels as well. Now, the company's expansion of e-commerce capabilities is also likely to supplement its growth in the coming months. Now, government measures aim to curb the supply of the Chinese imports and promote the in-house production of goods and services, and that is unlikely to have any negative impact on its business operations. Now, if you really look at, Hawkins has actually zero reliance on China and manufactures its products domestically itself, and that is through its production plants that's in Punjab, in Uttar Pradesh and in Maharashtra as well. Now, the company stands to gain from this situation as the competitors such as TTK Prestige, Wonder Chef, they all depend on China for their intermediate and finished goods. Now, job losses, pay cuts, also income uncertainty, these are dampeners to the overall consumption, but the demand for the pressure cookers and also cookware is definitely anticipated to remain robust as COVID-19 has really altered the consumer preference, and more people are now preferring to cook food at home, and that is due to concerns around health and hygiene. Now, Hawkins offers an interesting investment proposition, and that's owing to its strong brand recall and also the solid business fundamentals at this point in time. Now, the stock can definitely give steady returns over the longer run.